So by this time of the year, typically based on 15 years of seasonal data, we're usually up about 8% on median price. For 2024, we're up roughly just under 2%. As you will see, we've had a spectacular slide in prices over the summer. Now, the good news is I think this is coming to an end in terms of the price declines, at least temporarily. I feel in September, things are going to stabilize, maybe even go up. It really depends on where you are and the type of property you're selling. The real story this month is going to be condos are getting decimated across the GTA and they're skewing down the entire market. Obviously, it's a little bit more nuanced than that. The entire market is fairly slow. However, condos are really kind of skewing the data. So if you like this type of stuff, please like the video, subscribe to the channel. Now let's get into the data. Now the prior chart on seasonality for median price and how it's down and it's a flat year, there's nothing interesting there because there's no insight we can get out of that. That is a very general high level view chart of median prices. The real story is once you drill down into condos, townhouses, detached, etc. by area. So we're going to take a look at Toronto because I think Toronto, based on volume, reflects what's happening at the GTA at large. Obviously, some caveats in there. But the top graph right here shows you detached pricing over the last 10 years in Toronto. And then the bottom chart is condos. So what you'll see, interesting enough here, is you will see just by trend, if you look at the trend lines, typically detached is appreciating even now in the last few years, or I guess the last 2 years where the market has been relatively soft, prices for detached are still kind of creeping up. Let's say they're pegged to inflation or a little bit below. But that is not the same story for condos. And this is what's skewing the market down substantially because condos do make up a large portion of the market. Now, what you should note here is that detached homes usually trade more seasonal. So all these bottoms here that you see right here, not the peaks, but the valleys, this is typically the summer months or like the Januaries and Decembers where nobody's really buying. Condos are generally not as seasonal. They usually trade more steadily, especially back in the day when a lot of investors were buying. You were generally buying on cash flow. We'll get to that in a second. But this is just to illustrate how different the markets are. So really, if somebody's asking how's the market, really it depends what you're asking. Are you talking about condos? Are you talking about detached? Are you talking about Markham, or are you talking about Brampton, or are you talking about East York? Here's a prime example of a condo in the east end of downtown. Wow. So this was purchased by somebody 3 years ago for $510,000. It's a one bedroom, small one bedroom, no garage. At this time, with rates where they were, let's say below 2 or around 2, this probably was not cash flowing. This was outflowing, but it maybe made money because the interest portion of the mortgage payment was so low. So it made sense. It now sells for $365,000 less. So this is the situation in condos. And this is why I think we're going to start finding the floors on certain condos. Obviously, this is not reflected for all condos, but $365,000 right now. This condo, if you purchased this today with 20% down, with maintenance, with property tax, with insurance, the rent you would be getting is about $2,100, which makes this a break-even investment. So you could buy this right now and not be cash flowing any money. And this is something that we haven't seen in the GTA or in downtown Toronto in ages. I can't even remember the last time I saw what I would consider is a break-even unit. Forget about cash flow positives. Usually people were buying cash flow negative condo units, but this is to show you the floor is coming in because once condo units start cash flowing, as long as it's a good building without any skeletons in the closet, which I don't want to say, I think this one might have some, which reflects the lower price. The point is, things are starting to make sense. And I think once things are cash flow neutral, you're going to see investors come back in. It's probably too soon right now, but it's interesting to see that as of right now, the summer of 2024, we're starting to see cash flow neutral condo units. And now here's the situation with detached homes, median prices across the GTA. So for example, in Halton, you saw some pretty decent drops, but then you look at a place like York Region, you look at Richmond Hill and Stouffville where median prices are actually up. Toronto is slightly up. So as you will see, the detached side of things is not actually as dramatic as the stats would have you believe at the general point. For those of you who follow the channel, you know this is probably the most telling graph, at least from my perspective. This is what's going to tell us how the market's going to behave in the immediate 60 to 90 days. So to recap, what happened with new listings? So the summer was especially bad because we overshot on new listings, meaning a lot more listings came on the market than we typically see in the summer. And this is why we had a bunch of stuff just sitting, relisting, and not getting absorbed because we don't have as many buyers as we typically see. And it's not because we don't have buyers. We don't have buyers at these current prices. That's the one thing we'll have to remember. There's money on the sidelines. People are going to buy, and properties do sell if they're priced well, but people are just a lot more disciplined in general. Now, the good news is that new listings for August somewhat stabilized as per seasonal norms, but I do expect this to once again overshoot into the fall market. So we're likely going to see more new listings coming on the market than we typically see during seasonal norms. Now, this absorption number in terms of how many buyers actually execute, this is going to be the interesting thing. I'm not holding my breath. I do believe, though, anything that's priced properly is going to sell. So to give you an example, I see a lot of properties right now where, let's just say, the market value as per all metrics suggests that a home is worth, let's say, $1.5 million. What a lot of sellers may do is they'll list it for 1.6 in anticipation that whoever is going to come and try to offer on the home is going to lowball them. So maybe they're going to offer 1.4, 1.45. So this is their way to kind of bring them up to 1.5 in order to get the price they want. What ends up happening is you have a bunch of these properties right now that they're listed a little bit higher than their market value, and they're not attracting any showings. So if you're not getting showings, there's nothing to negotiate. So in this case, I feel it's actually more important to be priced in line to try to get the actual buyers to come up to your price rather than try to build in a buffer and overpricing to try to use that as a buffer to help you negotiate and meet in the middle of whatever the market value is. So that is just some food for thought. Obviously, the market's changing all the time. It really depends on the property, how much inventory you're competing with in your immediate neighborhood. But that is the general gist right now in terms of what's happening. The elephant in the room continues to be that absorption, or the number of deals that are happening, is 35% less than seasonal norms. Couple that with higher than average inventory, this continues to be a very difficult market for sellers in the GTA right now. Here's the end result of overpriced active listings sitting on the market, relisting, and just stagnating. Ultimately, you end up with active listings being well above where they should be for this time of the year. And I do anticipate that this number is likely going to come right back up. And in fact, we may actually beat the summer months active listings with 23 to 24,000 active listings in the summer. I think, 24 to 25,000 active listings for this fall market. It's probably not off the table. I don't know if it will happen, but things are leading me to believe that there's a high probability of it happening. And speaking of predictions and probabilities, Wawa.ca has this Bank of Canada meeting schedule where they have a probability or a likelihood based on bond yields and a bunch of other market factors. What is the likelihood of a rate cut in the future? So right now, the experts are expecting additional 2 more rate cuts. So we just had one in September and they're expecting 2 more, which is great news for sentiment. I mean, whether or not it's a little too late at this point, I don't know. But the point is, the expectation is baked in. And that is also in addition to banks right now are extremely competitive with their rates. They're all fighting for market share to get mortgages. So for the end user, for the buyer right now, it's a great time to be shopping for mortgages. Mortgage rates are very competitive based on where the Bank of Canada rate is. If you enjoyed this video and enjoyed this content, please like the video, subscribe to the channel, and I'll see you in the next one.